And hey everybody, welcome. Happy Friday morning. Happy to see you. Let's take a look at the charts here. Some big stuff going on. I mean, it's like big time stuff. Take a look at this pound yen chart. Just dropping like a stone. Last night, I sold a pound yen. Well, I sold a pound yen, you know, in general, I sold the pound yen. Trade copy account, smaller account, larger account, binary options account. And I gave the binary option an expiration of 11 p.m. And it wasn't until like 1 o'clock in the morning that the drop occurred. But what I have going on now is opportunity for a buy trade. We're oversold across the board. 3 minutes and 30 seconds left to go. I think we can close above 26. Oh, that's too expensive. That suddenly got too expensive. Jerk. Now we'll start things off with a really, instead of starting things off with a really affordable trade, I think I'll go ahead and start things off with a terrible trade. Oh, the order didn't even get filled. Oh, wait. It did. There we go. Open positions. We don't need the order history. We need the open positions. There we go. I think we can finish above 147.26. I think that's reasonable. Look at this. 5-minute chart just got hammered. I could probably... Hey everybody, welcome to the broadcast if you're just joining us now. I'm Rob Booker, best-selling author of Adventures of a Currency Trader and Trading by Faith. We'll do some trading this morning. We'll do some talking. We'll do some chit-chatting. Oh, look at this. Holy smokes. Check this out. This is the trade copy account in which I sold the pound yen. So we did well there. I got to close that trade right now. Close trade with money. Close trade with money. Okay, chat it up in this chat room. Say hello. Let me know where you're from. Let me know how you're doing. Today we will do some trading. Maybe some good trading. If we're lucky, maybe some bad trading. If we're doing what we normally do. Normally, wow, I really want to buy the pound yen today, but it just keeps dropping. Are all the equity markets just crashing? Not really. Is it just the pound that's crashing? Oh, look at the pound. Oh, for those of you that have been short the British pound pairs, wow, you got a gift. You have a gift. Use it. All right, so I certainly don't have a gift for picking bullish binary contracts this morning. Oh, just realized the light's off. Hold on. Let's get this bad boy turned on. Took my daughter to the Waffle House this morning and basically raced into the office at the last minute to fire up the old trading account. Oh, that's much better. Look at that. So happy morning to everybody. The chat is ready to display messages. I'm very much looking forward to hearing from you fine ladies and gentlemen this morning here. With 5 minutes to go on the brand new contract, I want to go bullish. I think we want to close above. Wow, there's nothing affordable. Holy smokes. These are all really expensive. So I want my money back that I just lost on the previous contract that I paid too much for. Hey Scott, nice to see you here. There is no lesson more important than the lesson of not paying too much for a contract. That's the lesson. That is the most important lesson. Just don't pay too much for a contract. And then everything else kind of falls into place after that. I want to buy the pound yen, but everything is really expensive. Right now I could spend, let me look at this. For example, I could spend $82 to make $17. You might say, well, if it's a super high probability trade, why not do it? Well, here, let's increase the size of the position. Would you risk $82,000 to make $17,000? I mean, the thought of losing $82,000 is too significant. There's no way we would ever do that. But when it comes down to 82 and 17, those numbers seem so small and manageable that you almost would consider doing it. But it's not a good trade-off. The 147.18 contract is significantly cheaper. I might go for one of those. The minute I say I want to go for one of those, it's like the price changes. I really don't want that one. I want the 147.13 that's already in the money. And now it's too late in the game. Hey, Lloyd is here. Lloyd says the pound yen may drop farther. Give me a price, Lloyd. That looks like a quote for a different currency pair. Maybe pound yen, pound New Zealand. Scott says, do you like binary options because they're fun or because you do well trading them? Well, I mean, currently I'm up a bit here in the trading account. So I do enjoy trading them because they've been good to me and I've been good to them. I scratch their back, they scratch my back. But also I do like getting an answer back about whether my position was a good idea, quickly. To make the same amount of money from spot Forex would take a longer amount of time and a greater amount of risk. And I think I'd learn the same amount from trading both, but in different areas. And the area that I'm trying to get better at is price action. I want to learn better how to read the candles. And I figure if I spend 2 or 3 or 4 hours a day for the next 200 days, I put in 1,000 or 2,000 hours of time, I'm going to get a lot better at trading these contracts, but I'm also going to learn a lot about price action. And for example, right now I'm looking at the pound yen, and we're oversold probably on multiple time frames, which we are, so that's a good time to start looking for a buy trade. And I want to start looking at candle patterns that would designate a move upward. And I want to spend as little as possible to get into the trade. And I want to do that because then it has a greater chance of going profitable. Well, that's that. So here's the 1 hour chart, it's oversold. The 4 hour chart's on the way to being oversold. The 15-minute chart is oversold. The 5-minute chart's oversold. I'm going to guess the 1-minute chart's oversold too. Okay. Yeah, the 1-minute chart's just coming out of oversold. So look, it's printing a smallish body candle with a large wick on top. On the next contract, I want to go long. Do I use Knoxville divergence? I do like to see Knoxville divergence on the binaries. Knoxville divergence combined with some price action. I want to go long on the 147.11 contract. If I can get that for cheap. I'll buy one of these 147.16s. I'll buy one of these 147.11s. Just one each. Now I'm overpaying for these, and I'm gonna regret that. I have no doubt, and we'll have a conversation about that. It's Charles Barkley once said, "I'm definitely not a role model, and I'm not attempting to be a role model. And trading involves a substantial risk of loss and is not suitable for all investors." I think what I'm doing is making my mistakes visible to you, my successes visible to you, but I think you're going to learn more from my mistakes than you're going to learn from my successes. And I'm going to make a hell of a lot more mistakes than I am anything else, so you might as well learn from that a bit. The first rule of this binary options trading for me is a rule similar to the first rule of all kind of trading in general. Pay as little as possible to get into something, because eventually you're going to have to get out of it. And it's easier to get out of something if you've paid the least amount of money possible to get in to the trade in the first place. So that's the first rule. The second rule for me is get into the contract early on so that it has the maximum amount of time to go profitable. Now, I overpaid here. What I generally like to do is pay no more than $15 to make $85. If I overpay for a contract, which I've done here, I've usually done it because I'm super enthusiastic. I think I know something that the rest of the market doesn't know. All of those things are completely ridiculous and never true. I never know something that the rest of the market doesn't know. I'm always going to regret having paid too much for a position. And I'm in the process right in this moment of regretting that I paid too much for a position. Some of you have brought up the concept of trend trading, and maybe what I could have done here is sold one of these that's a trend trade. And there's no doubt about it. Price is demonstrating that it wants to fall, not rise. So why not try to benefit from that drop? And on the next contract, maybe that's exactly what we'll do. Maybe we'll get into one that could benefit from a price drop and get into one that will benefit from price rising. Neither of the two that I'm in right now are going to be profitable. Both of these are going to expire, and they're going to be a loss. Well, I don't know. This 147.11 might end up profitable. You can see here, here's the price with 1 minute left to go. So we could take a look at that and see if price can stay above 147.11. Can it do that? With 1 minute and 22 seconds left to go, it's not out of the question. I mean, I risked 59 to make 41. That's not a great risk to reward ratio. Once again, like I said, it's a lesson for you. You watch me make a mistake, you watch me get penalized for making a mistake, and then you don't make that same mistake. Kay Romney is here. Good morning, everyone. What's up, Rob? Greetings from the Caribbean. Yaman. I would like to be in the Caribbean right now. Jorge Herrera is here. Have you considered using Apex Scanner to efficiently view and enter trades on Nadex? I don't know what the heck that is. So maybe they have learn how to a binary options scanner. Daryl Martin is the CEO. Okay, great. I'll check Daryl Martin and his Apex scanner out. 9 seconds left to go. This contract's going to expire worthless. But we're going to get a chance here to right the wrongs that have been done to me by myself. I'm going to trade this one. We're going to pay as little as possible this time. Okay, so we're going to pay, hopefully, $10 to make 90. Okay, we got that one. We got a couple of those positions. We could try to benefit from a price drop here. So we'll risk 12 to make 88. Risk 9 to make 91. Okay. Maybe maybe that position will never open. Yeah, we'll get that. It'll take that trade. And then maybe take another one. Yeah, see, a lot of these are looking too expensive, but we're gonna get a bump up here pretty soon, and it's gonna be pretty significant. Spend 12 or 11 or 9. Where'd all my open positions go? There you go. Okay, so I got a bunch of trades that I did not pay very much for. Now we'll see the difference here in when we trade something that is less expensive. I want to do another one of these short trades, but I'm not going to get it. So if I make $91, let's just say it falls suddenly and I make $91 on this trade. That pays for all the other ones that I took. That's already profitable. See how much easier it is to make money when you pay very little for something? We're already down close to profitability with 2 minutes left to go. And all it has to do is stay below 147.01. But I don't have to stay in this trade the whole time either. If I fear that it might pop up a bit, I could just get out of the trade and take the money. See if I can zoom in here, but I can still click this button. 35 bucks, 31 bucks. We're not quite in the money. It has to be below 147.01. Oh, there it is. It's below. And if it's in the money, I'm going to keep it. I want to keep it anyway. But it's fluctuating between in the money and out of the money. With 1 minute and 52 seconds left to go, I just want some money now. Okay, I'm just going to take a win if I can get it. Yeah, just try to get out of that trade. Okay. The only reason I would keep a position all the way through to expiration in that circumstance is if it was 1 or 2 pips in the money. And then it would just be not a free ride, but it would be close to a free ride, because why not just keep it because the risk was so small? Mark says you paid very little and you followed the trend. And when you do things right, you do things right. Like I said, I'm not a role model. I make a ton of mistakes. And you're going to watch that happen, and I'm not embarrassed by it. I'm not offended if you criticize me for legitimate mistakes that I make. It just makes me a better trader. Every once in a while, I'm going to have a huge win. And hopefully we'll be here live and you'll see that and we'll learn from it. And every single time that happens, it will be that I spent as little as possible for the chance to make a bunch. And it paid off, so. We'll maybe see one of those experiences today, because we are going down to the round number on the pound yen, 147. Don't the sell orders stay open until canceled? Yeah, they can. Okay, here we got another contract coming online. Risk 10 to make 90. Okay, that'll do. That'll do, donkey. Risk 17 to make 83. I don't mind that one. Don't mind if I do. Now, I could do another bearish one if it's going to fall below 146.96. But we are so deeply oversold, and we're at the round number. So there's no chance that at this round number down here, I'm going to continue to go bearish. In fact, I want another bullish one. 147.11, 147.06. I don't want to pay too much for this. Oh, that suddenly got really expensive. Okay, so we're positive. You can see here, we're making money on both contracts now here at the bottom. And we're all the way in the money with 3 minutes left to go. I really want to close the 147.16. I don't think that one has as much of a chance of success. The 147.11. Well, now we're in the money on almost both of them. Scott says, well done, Rob Live is the best. Rich says, well said, Rob. I've been trading for over a decade. Newbies always see the hype of winning but don't understand the probability. You have to have losing days, weeks, and months. That's a smart comment, Richie. I'm going to keep both of these for another minute. With 2 minutes and 34 seconds left to go, if we could jump up just a bit, boy, I'd be happy on this 147.16. I did not pay very much for that one. What's the price on that? Can I see? I don't need to see the position value. Let's try to tighten up what we display here. There we go. Oh, wow, they're both in the money. Yeah, that's going to be a win. 1 minute, 56 seconds left to go. I'm going to keep both of these. We're almost at max profit on the 147.11. Right? We stand to gain maximum 83 and we're at 75. So let's just take that money, no matter what. Okay, so we guaranteed ourselves as close to the maximum win as possible. So no matter what, our second contract that we paid $7 for is paid for. It's a free ride. So we risked 7 to make 93, and it seems like a no-brainer to keep that one. I only wish that when I was buying one that was $7 that I'd bought more of them. When you eventually, at some point in time, see me make a super profitable trade, $200, $300, $400, $500 or whatever, it will be due to the fact that in the same situation that we're in right here, I will have traded way more contracts because they were less expensive. And I took 10 minutes to get a feel for the market, saw the situation as it is right here, saw getting to a round number, saw the bullish divergence, and all of that stuff, and then loaded up, backed up the truck. Because earlier on in this session, let's just take a look at the chart here. You can see this thing end up profitable. 17 seconds left to go, then we'll continue the discussion. It's going to be a maximum win. You'll see the account value jump up a bit here. At least I'm guessing that you will. And there we go. Boom. Just a little boom, because what I did wrong here was earlier on I spent too much for a contract. And I lost like 60 bucks. Let's just say I lost 70. I did. I don't know how much it was, but let's just say I lost 70. And I lost 70 on one contract that had, let's say, a 50-50 probability of success. When I could have bought 10 contracts for $7 later on and risked the same $70 for the chance to make 700, 800, 900. That's a way better risk to reward, even though the probability seemed lower. But it wasn't. You take together as a whole what I'm trying to do here. Pay as little as possible so that when the time is right, I can trade multiple contracts. Number two, trade in the first minute of the contract so that it has the maximum amount of time to go profitable. Three, use price action combined with divergence, as you see on the chart, and maybe round numbers, as you see on the chart, and overbought and oversold. That combination's pretty good. And so the probability on this last one that was a win wasn't really lower. It was probably 50-50, still the same. So 10 minutes ago, I had risked $70 to make 30, and I had a 50% chance of success. That's stupid. Don't do that. Later on, I had the chance to risk $7 to make 93, and I had a 50% chance of success. And that seems way more intelligent, does it not? So maybe you watched a real-time bad decision and a real-time good decision. And I'm doing this live, and I'm doing this together with you. Hi, my wife just left a heart in the broadcast. Check out my wife's blog, nikkibooker.com. Sign up for her email list. She writes about dating and relationships. Almost everything that she writes is applicable to males and females, which are the two major, most popular genders, last I checked. Okay, back to the lessons. I do this live and I do this in front of you because I like for you to watch me make mistakes, but also because talking about it reinforces the lessons that I want to learn for myself. And what I would have done better this morning is I would have traded more contracts when it was less expensive. It's so crazy that what I will do is think that I've figured it out, overpay for a contract, and lose the money. And then later on, I'll find a bargain, but I'll shy away from taking extra trades on it because I feel like the probability is lower. It's so dumb. When in reality, the probability was probably exactly the same. But it's in the moment of live trading that it is so hard to do instant analysis. It's like trying to think of the next thing you're supposed to say when you're in the middle of an argument with someone you love. It's a terrible time to write dialogue for the movie of your life when it's all on the line. A better time is to sit back in a moment of reflection and size up the lessons that you've learned, and then make your decisions ahead of time. Decide ahead of time what you're going to do when the pressure is on, so that when the pressure is on, you don't have to think about the small things. So next time around, when I'm faced with the opportunity to buy an inexpensive contract that has a 50% chance of success when we're at a round number and all that other stuff, then I'm going to make a better decision to take more trades. Even if it's just one more. I don't have to back the truck up and show you me making $930. Yeah, I do. I really want to make $930. Lloyd says bye. He's gone. Scott says, what's your Better Halves podcast again? Nikki's podcast goes live, and I think it's called Find Your Soul, Find Your Soulmate. And I think it goes live today, tomorrow, or on Monday. I think Nikki and I should do a podcast together. And just for the record, has anybody here ever heard the Rise and Shine podcast? Because I really don't want to do any more episodes of the Traders podcast. Maybe take a couple of months off from that, and maybe publish some new episodes of the Rise and Shine podcast. Scott Welsh, Jason Piles, Rob Booker. Scott wants to know if there's any binary options lessons in the lifetime membership course. And yes, that course comes out on Monday or Tuesday of next week, and it will be super inexpensive. I love seeing all of your comments as we go. All right, what do we got going on here? Anything inexpensive? Anything on sale here? Well, I got out of that. Remember that $1,000 win on the pound yen we took just a few minutes ago? We got out at the bottom. Psh, great job, everybody. Hey, wait, I still have that trade open in a smaller account. Maybe not. I don't know. We'll check that later. We ain't got no time for that. Everything's too expensive now on these contracts. Let's check the short-term charts on the Australian dollar. Their Euro-US dollar. When I'm doing this live, I can hear myself speaking back into my headphones. Makes it really difficult. Okay, so I'm trying to learn about price action. And here's an example of what I'm trying to find out and learn. Let's do a little price action lesson. The trend is lower. We print two small-bodied candles with almost no body and wicks that are about, shadows that are about the same length as the body, followed by a bullish candle with a long wick at the bottom showing that price couldn't stay low, and a bigger body that goes up top that fills the last three candle bodies. It seems to me that we'd be smart to look at bullish And there we are. All right. So the batteries were, they go out like every 2 days or so. And I have to replace those batteries more often than I even remember to do. Okay, let's go back to the pound yen. Pound yen's been good to us. Momentum lost, but for reversal, I say compare the candle wick time as well. Yeah. So thanks for hanging with me there while I was changing the battery. Pound yen 15-minute chart. Is there anything we can pay very little money for here? We want to be cheap, right? Anything bearish? That's inexpensive? Risk 15 to make 85. But there's 4 minutes left to go. Remember, what we're going to do is we're going to go down, pop up, go sideways, come down, and then go up again. That was the worst drawing you've ever seen because you didn't see it. Here's what I was saying. See if we can get an arrow. Here we go. So we go down, then we go sideways, then we come down again, and then we go up. That's what I'm expecting. And then back up again. So I was looking here, which would have been a reasonable thing to do. I was looking at getting into something that would make money if we fell to 147.23. I think we're going to stay below 147.28. And we may have an opportunity here to show you an example of when I might trade something in the final minute of a contract. Scott Hankinson is here. Hey, Scott. Thanks, everybody, for hanging out with me during these live trading sessions. It's a lot of fun. How you doing, Sock Monkey? All right, with 2 minutes left to go, I'll start describing what it is that we can do in the final minute. So in the final minute of a contract, let's say that we've gone a little bit bearish. And let's say we're below 147.28 in the final minute. It's likely at that point that we'll stay below 147.28. And we could, at that point in the final minute, trade something that will benefit if it closes and finishes below that or above it, even though it might be a little bit expensive to do that. Like, it looks like we're going to print a candle with a very small body, and we're not going to get a chance to do everything that I just said. It does look like with 1 minute left to go, we're going to stay below 147.33. So I'm going to pull this up and get this ready. See, we could risk 50 to make 50 on something that benefits from price dropping back lower in the last minute. And right there, it would already be profitable. I missed it. That was our chance. And we'll get a better example of that over time. This wasn't the time or place. I want to go bearish on the next candle. But I'm a little bit concerned that I'm going to have to overpay for that. You can see here the 1 minute chart's topping out a bit. Should come back down before it continues to go higher. 31 seconds left to go on this contract. Steve and Martin says, thank you for the final countdown. Douglas Olmsted says, pound Aussie is hurting my honey Finch today. Oh, yeah. Oh, yeah, Finch is probably in a bunch of bad trades. Oh, we'll take a look at that in a minute. I'll pull that up and get that ready. How do you like this Caribbean music in the background? Okay, let's see if we can go bearish. 147.30. I bet we stay below 147.30. That's my guess. That's a 50-50 risk. There's the $50 risk. Max, oh, yeah, there it is. Risk 60 to make 39. It was a great trade. I didn't pull the trigger on it. Said I wanted to do it, and then I didn't do it. It's on the edge of too expensive. So I didn't do it. I don't regret it, because we did okay earlier. What's the 140? Here, we could do this. This is inexpensive. 146, 147.26. It's not going to fall that far, though. That's ridiculous. Man, I missed the good one. See how the robots are doing. They're going to be unhappy. Oh! All right, the gold charts are charts that have 2 trades open. We did close all trades, and the account overall is doing fine. But I bet we're in a whole bunch of buy trades on the pound. Yeah, we are. Look at all these buy trades. It couldn't buy the pound Australian because I set this to sell only. Gosh, what if I had just paid better attention to that and done all of the British pound sell only? Anyway, those trades will be fine. I'm not going to spend a huge amount of time worrying about that. That's why I have a robot worrying about it. Robot stayed up all night. See, I'm glad I didn't trade the 147.26. I regret that I didn't get into the 147.31 trade. But it was expensive, and I could have traded just one of those. Kay Romney's talking about gold. I just love gold. I just think that bullish gold is a spectacular long-term 1, 2, 3-year, 4-year trade right now. With the market at all-time highs, inflation bound to go up, interest rates go up, value of money goes down, value of paper money goes down. I think we could just have a little fundamental economic analysis right now. Stock market at all-time high, political uncertainty at a 2 or 3-year high, interest rates on the rise no matter what. No matter what. Interest rates probably on the rise. 80-90% chance that interest rates continue upward from here. Interest rates go up because the Fed wants to discourage lending and cheap money, encourage savings. That's good. The value of the dollar goes down, value of gold goes up. If the stock market drops off from the highs, that's good for gold. If political uncertainty is on the rise, that's good for gold. Anyway. I don't know if we're going to get another trade here. 47 seconds left to go. We're going to go down into the 147.25 area. Still though, that contract wouldn't even be worth anything, the one I was thinking about buying. It wouldn't have even been a good idea. With 28 seconds left to go, I really want to... I'm glad I can prevent myself from trading. That would have been a great last second trade. Wow. All right, can we go bullish again? Not quite yet. 5-minute chart is doing exactly what we thought it would do. It's dropping lower. The 1-minute chart should stretch into oversold territory. 15-minute chart is still oversold. 30-minute chart still oversold. 60-minute chart still oversold. The 78-minute chart, which is irrelevant, is oversold. The candle, look at this candle on the 1 hour chart. Small body, long wick. Waka, 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 waka. 5 minute. I like this song. What's this? It's a good one. Here, I'll show you what it is. Let's take a little break here. Grabbing a drink of water. And we're back. All right, may get a final trade in here at the very end of our live trading session. I think as time goes on, these sessions will get longer. I want to spend more time doing this. More practice I get, the better. And take a look at the 5 minute chart. Coming back up a bit, but I think the 1 minute, oh, look at that 1 minute candle. I think this super long wick either shows where price wants to go, or it shows that price couldn't get any further down. We're right at the 50% mark on the oscillator. I think the pound yen's ready to recover for the day. I probably shouldn't do any more trading, but I want to do one last set of inexpensive contracts. I love all the comments coming through on YouTube and everywhere else. It's so nice to see you all. With 1 minute and 28 seconds left to go, we'll get a new batch of pound yen contracts in just a moment. Close this out, bring this up. We'll get a good look at them when they come online. Get a real big. So I want to go the bullish one that's inexpensive and bearish another that's inexpensive. I can see the bid and the offer just barely. 42 seconds left to go. I'm going to change my display options. Squeeze everything up together a little bit better. Now you get a really good look at the quotes here. So I might want to go long something far out of the money that's really inexpensive. And then offset that by trading something that will benefit if we drop significantly also. All right, this one's coming online. With 1 second left to go, we're going to get a bid and an offer up here. These are expensive. They always start off a little bit more expensive than I would ever trade. And then they decrease in price in the first 10, 20 seconds. There we go. Something at 147.38 is still too expensive. You know what? I'm going to put a bid in here. See if I can get filled on that. So that's a working order now. Doesn't look like it's going to get filled. 147.18. So if it falls a long way, which it's not likely to do, but let's go ahead and see if we can benefit from that. Didn't get filled on the bullish one. It just was too expensive. We'll delete that order and maybe replace it. Because we're already, it was a 147.38 contract and we're already almost to that number. So we gave ourselves a chance to make $184.50 by risking $16. So we got a really big bearish move. We'd benefit from that. And I couldn't get a contract on the bullish side for a price that I agreed with. With 3 minutes and 22 seconds left to go, the contract that I wanted still wouldn't even be profitable at the price that I had to pay for it. Yeah, that would have been a mistake to trade that one. I don't even think I would trade the 147.33 contract, the one right here. I don't even think I'd trade that one bullish. I think we're in fact maybe more likely to fall than we are to rise. But everything's too expensive now at this point. With 2 minutes left to go, our open positions are going to end up unprofitable because it's not going to fall that far that fast. Oh, it did get up to 147.38. Look at that. But it didn't stay. I bet we stay below 147.38. Could we sell that one? Maybe take a little bit of a bigger risk in the last minute? Are we going to get a chance on one of those that I talk about? It's just below, oh, it's above 147.38 now. Now it's back below it. See, in that last minute, if it's bearish, I could say, I'll give you a minute to try to jump back up, but I don't think you will. And it's not going to. That would have been, if I can get a contract in the last minute that risks 50 to make 50. And in this case, so price is trading at, let's just do .37. The .38 contract is up here, and it's only profitable if in 59 or 60 seconds, price can jump up and stay above that level. But I don't think that's likely because it just hasn't been able to break that all contract long. So I sell this for 50 to make 50. And if it just stays right here, which it's likely to do in that last minute, I make 50. So we have a higher probability trade with a less attractive risk to reward ratio. And that contract right now would expire worthless, and that trade would be great, would have been exactly what we wanted. But I don't want to pay more than $50 for that. That doesn't excite me. Can I get something here that's bearish? I mean, we have been bearish all morning long. We're overbought on the 1 minute chart. So can I get something here? Risk 13 to make 87. Can we get filled on that? We did. We got filled on that. So we've gone for an hour today. This is great. Thanks for hanging with me. Maybe get a 147.31 contract as well. I bet we stay below 147.41. Easily stay below that number, I think. Can we stay below 147.36? Possibly, but not necessarily likely. Looks like I might get a chance in the last minute. Take a look at the 1 minute chart here. We're printing lots of bullish candles. Finally going to get to a bearish candle here. I want to trade something that benefits if we stay below 147.41. Oh, I'm going to overpay for this. Can't even get it. Just got rejected. Oh, I got it. All right, so I overpaid. What I do now is I look to get out of this trade that I overpaid for as soon as I can at almost any amount of profit, unless it goes deeply into the money, in which case I can keep it. But it's out of the money, and it was likely to be out of the money, and I overpaid for it. But we're super overbought on the 1 minute chart. You can see that down here. Lots of bullish candles in a row. If you want to learn from my mistakes, you're watching the right broadcast. This candle right here, this bullish body, long wicks on either side, I liked that. I think that was smart. I think I made the right decision, but I paid too much. Now we're deeply in the money. Holy smokes, we might go in the money on both of these. No. 1 minute and 54 seconds left to go. Whoa, this is a lot of price action back and forth. Is there an economic report coming out in 2 minutes? No. Jeez, this is all over the place. It's hilarious. We almost made money on our 147.26 contract. Oh my gosh, this thing is just moving back and forth wildly. This is why you don't pay too much for a trade. Because if you pay too much, you just end up thinking, what kind of crazy person does what I just did? Oh, I had a chance to get out of that too. What the heck is going on? Do you see this candle that's printing right here? What in the blazes is that? That is the weird. 20 seconds left to go. This is all over the place. Well, at least we're ending on an exciting note. 12 seconds left to go. Who knows where this is going to end up? It is below on the chart, but above on the indicative price. 2 seconds left to go. That was the weirdest contract expiration that I've seen in a long time. I had a chance there at the end to get out with a profit on a trade that I spent too much money for. That was bizarre. I want my money back. Now I want revenge. This thing is just all over the place. That is a bearish candle we just printed. Can we do another one of those really big moves that we just saw? Is this what price is going to be looking like for the next 15 minutes? Nobody wants to sit and watch me overpay for these things and break all the rules. But look at this beautiful candle right there. It's nicely bearish. What are these called? These two side-by-side ones, I wonder. Look at that drop, and then it just took all of it right back. Wow, that is really bizarre. How's the 5-minute chart looking? Looking like it could drop nicely. Not much, doesn't need to drop very much. Three minutes and 5 seconds left to go. Doesn't look like we're getting the same amount of back and forth volatility that we had before, just a few moments ago. And this will be, like I said, I'm in the last contract I want to be in today. If this can go profitable, I'll just take the money and get out. I mean, it didn't spend very much for it, right? So it's got a better chance of going profitable than maybe the one I traded just a moment ago, which was briefly fantastic. Okay, there you go, price. Good, good. Go profitable. You got it. You got it. That's right. You just drop another 5 pips. There you go. Profitable. So briefly that I didn't take it. Let's just put a limit order in here. See if it can pick up that trade. We've probably reached the maximum amount of profitability that that trade could possibly even have. Oh, no, it took it. Oh, we ended on a high note. Nice. Well, great. At least we didn't end on a sad, depressing note. Oh, look at that. That contract was going to go into profit and stay. So we got the direction right. We didn't do bad. Well, it's not bad. If I could come out of this learning something, we're going to be better off. Better than I found you, better than I found myself this morning. All right, when we come back a week from Monday, we'll be doing a lot more of this. I'm going to take all next week off. I'll post some videos on YouTube and Facebook with some lessons about this stuff. But I'm not going to do any live trading next week. I'll be gone and pretty much out of contact during that entire time. And then I'll be back in a week. I'll stay in touch by email, so looking forward to hearing from you. Stay in touch with 22 seconds left to go. Let's see if this stays below 147.31. And it will. Wow. Well, we made a pretty good, that final trade was a great decision that I could have held on to a bit longer. Like I just needed to give it just another moment or two. All right, everybody, have a wonderful day. Great to spend some time with you. Hope you've learned something. Hope you had a good time. I will see you in 1 week.